The S&P 500 broke a very critical trend line today. This is very important, guys, because look at this right here. This trend line extends all the way down to our yearly low that was made on October 13th. Also happened to be the last time we had CPI data released. If you drag this across to another support that we made on November 3rd, you get the level that we tested today and we closed below. That's another key thing. We retested this level here. It only provided, as you can see, a mini bounce intraday, and then we ended up closing right below it. This is crucial because we have CPI data tomorrow morning. If we stay below this line specifically tomorrow, especially on the open, and are not able to reclaim it, whether CPI is bearish and we continue down or it just opens flat below this level, that is very bearish because this means that a critical line, especially on SPX, was broken to the downside. And as long as it holds under, that has extreme bearish emphasis. And we could see this go a lot lower, like definitely into the 3,600s, mid 3,600s. So certainly watch this level. Now, is there a possibility or an inverse scenario where we reclaim it after CPI? Let's say CPI is kind of cooling and it has some form of bullish emphasis and we got back up above to this level. Yes, that is a possibility as well. So I'm certainly going to be watching to see where we open tomorrow, because that's going to give us a lot of insight on where the sentiment can be and the general consensus of where we may go in the future. On top of that, if you guys remember, we have this level right here at 269.40, which was the previous yearly low for QQQ, which is what I'm on right now. On June 16th, we made a low for tech here on this exact level, 269.40, and this has acted as a resistance and support for a very long time as we've kind of consolidated in this range over here. And if you go over to the 15-minute chart again, you can see that we've kind of flirted with this line the last few days, and we closed yet again below this level. So again, this is bearish, the fact that we are below. In simple terms, the more that we stay below this level, the more bearish emphasis in the future. The inverse would apply if we were able to get back above. But as you can see, we did get back above over here, but we are not above very long at all, which means that there is weakness. There's a lot of supply pressure up here in the mid 270s to early 280s. So it's not able to stay up here for very long, and it's showing a lot of weakness right now because it's not able to stay above. So I'm personally watching this because if tech's weak, then that is also going to transition over to the S&P 500, so that can lead for some more downside. What is really interesting to me, especially this week, is we touched just about the bottom of this VIX pennant. I've been talking about this one for a very long time, or at least this formation, this chart pattern here, and we touched the bottom of it, and we did have a significant bounce off the bottom. So we're certainly going to be looking for follow through, definitely with continuation upward. Let's say that CPI was bearish tomorrow, then this could have a lot more upside to go, because it has been hammered over the past couple weeks so far. It's shown a lot of weakness, so no surprise that we had some pullback on the S&P 500 and a bounce here, because VIX is for the most part inverse of the S&P 500. So we did have a bounce here on the VIX. Definitely, if you want to see excessive sell pressure and you are a bear, you're going to want to see us get back above the top of this pennant here. We were not able to stay above for very long before, and in previous tests, we have not been able to get above. So if we do get above in the future here, this could lead to a lot more upside on the VIX, which would lead to a lot more volatility, and hence would lead to some more downside in the S&P 500. So I am watching VIX very carefully right now, especially with the fact that we did bounce off the bottom of this pennant and support level. Additionally, we saw our whale friends come in and hit a lot of SPY puts today. They've been pretty quiet, if you haven't noticed, for the past like 1 or 2 weeks or so, at least not the same amount that we've been seeing in August, September, early October, etc. But we did see them reemerge today, and we saw right out the gates this morning a $7.8 million in premium out the money put for 375 strike. This is for the 1/20/23 expiration. We're starting to see a little bit more of these 120 expirations. We had previously seen a lot of November, but as we are getting closer to the 11/18 November expiration, we're starting to see more December, and especially now these January prints, which is kind of hard to believe already that it's only 2 months away for 2023 for this OPEX, that is. But you can see here we had a 1.6 million not too long after the 7.8 million, and these both were above the ask, as you can see here in the order details. So these are definitely significant orders, and we have not been seeing these as characteristic in the past couple weeks. So I am looking at those, keeping those on my radar, as well as some QQQ orders we saw today. We did see a large one after hours here. Remember, you can trade QQQ and SPY up to 15 minutes after the market closes. So these ones came in at 4:05 Eastern. So this was for 1.1 million in premium for the 259 strike. So this is out the money because they bought it at 263, at least the spot price of QQQ. And this one is a short expiration. So it seems like this person is either one, hedging, or taking a directional bet going into CPI because the expiration is very, very close. It is the weekly contracts for Friday of this week. So this is certainly interesting to me, especially because it also is above the ask, as you can see here in the order details. And we saw quite a bit of put flow on QQQ today. As you can see up here, 100% put flow to 0% call flow if you filter for above 1 million in premium. So this is very interesting to me, especially with tech showing signs of weakness. As you can see as I scroll down here, a lot of puts, tech showing signs of weakness under that previous yearly low level. Plus on top of that, we saw a lot of dark pool activity today. You can see here 268 million in premium. For the 263 spot, we saw 184 million in premium. And this is where it gets interesting. If you scroll down a little bit further throughout the day, which you can see a ton of prints so far, not very common to see this many prints on QQQ, you get down to 528 million in premium one, and also a 479 million in premium, which equates for over 1 billion in total for dark pool prints within this about 30-minute span, or 15-minute span that is, for dark pools. So very uncommon. Now we have seen some in SPY where they are above 1 billion in terms of singular dark pool prints in the past. However, those are rare. It is even more rare to see that on QQQ. So I certainly am looking at this, especially the spot price where we saw this 264.33. If we see a continuous rejection, or if we see that we still are below this level in the future after CPI especially, then that does have a bearish emphasis in play for QQQ. And again, that is going to have an impact on the S&P 500. Something else very notable, and this is something that I've mentioned now in the past 2 videos, but this is something very rare. We have seen over 1 billion in premium for signature dark pool prints on the S&P 500 for the last 2 weeks straight. Every single day has had at least over 1 billion in premium. This is exceptionally rare, especially because in previous weeks, we had maybe seen a 1 billion print here or there, maybe every other day or every 3 days or so. And then we'd see like a 400 million print, which is barely anything for signature prints. We've been seeing over 1 billion every day. You can see here on November 9th today, 1.4 billion in premium. Go back to the 8th just to show you guys. You can see here again, we had 1.4 billion on the 8th. Go back to the 7th for Monday, and you'll just see the same exact trend, 1.6 billion. And the past week we saw even more. We had seen some 4 billion plus in premium. So this is exceptionally interesting, especially because a lot of these, or at least all of them, have been within the 375 to 390 range. Now, that is a $15 range. A lot of them have been skewed to the upside, like closer to the 385 to 390, but it's very interesting because if we do get some form of a significant gap down, let's say specifically after CPI, if that happens, and we stay down after it gaps down, that is going to provide a lot more bearish emphasis. Like I said earlier in the video, we could even see the mid 3,600s or lower 3,600s, because that would mean all of those dark pool prints up here within this range, especially for SPX around 3,800 to 3,900, was distribution, and a lot of distribution. Just very rare to see that much premium in a small amount of range and a short time span. And again, if you see a lot of distribution like that, that tends to mean there is a very large move that is on the horizon. And again, if we did have some form of a gap down or bearish emphasis to end this week, that could lead to a lot more downside in the future, because a lot of people, at least institutions, that is for the dark pools, they were unloading around this range. So certainly I'm going to be looking for that, especially if we get confirmation after CPI. That could lead to a lot more downside if that is the course that it wants to take. It certainly looks like we have a lot of volatile conditions ahead, which can be very profitable for us traders. We just have to be very, very cognizant of the amount of risk we're putting in. A lot of retail does not like to look at the risk aspect of trading, and they only like to look at the reward or potential profits, when in reality it's how little can I risk for the most amount of reward or gain in this case. So always be careful with these positions, especially with volatile conditions. And it certainly looks like it's going to be pretty fun in terms of trading with this volatile price action in the next couple of weeks. So again, do be careful. But other than that though, I appreciate you guys watching this video, and I'll see you guys on Sunday.